Good morning, everyone. Welcome to the global news segment of Business Morning. We'll take you through what's happening in the global space. We'll start from China now. The People's Bank of China, they've maintained interest rates for the fourth straight week. On Thursday, the bank left its one-year loan prime rate unchanged at 3.10%. Likewise, the five-year LPR, the benchmark for mortgage rates, was retained at 3.60%. The decision matched expectations. The bank had reduced its LPRs by 25 basis points each in October 2024, and it fixes the LPR monthly based on submission of 18 designated banks. However, Beijing has influence over the fixing. The LPR replaced the traditional benchmark lending rate in August 2019, and data release shows that the bank lending surged to a record CNY 5.1 trillion in January, but largely due to the season factor. Lending usually remains the strongest at the start of the year. Earlier, Capital Economics had said that given the pressures on the bank profitability, the PBOC is likely to prioritize lowering reserve requirements before proceeding with more rate cuts. The firm said that the central bank will avoid a rate cut that could trigger additional depreciation of the currency amid trade tariff threats. So I wonder if this is, can this suggest that perhaps our MPC decision today will be a hold? We'll just have to wait and see in a couple of hours. And now the European Union's biggest economies are split over whether the bloc should weaken its sustainability reporting rules for companies, with Spain and Italy defending some rules that Germany and France want to be delayed. The European Commission plans to publish an omnibus proposal next week to simplify green rules for businesses, aiming to make local industries more competitive and respond to U.S. President Donald Trump's promise to scrap regulations. The proposal will address the EU's corporate sustainability reporting rules, known as CSRD, its due diligence law, and its taxonomy system for labeling climate-friendly investment. In a letter to the Commission, Spain's government has asked Brussels not to weaken the due diligence law, which from 2027 will require companies to check human rights and environmental issues in their supply chains. Separately, Italy is asking EU not to delay the rules for the tens of thousands of companies which will report under the rules this year. A letter by Italy's finance minister to the European Commission had this information. Now we move to Australia, where that country has allocated $1 billion to a fund that will support the manufacture of green iron and its supply chains, including an initial $500 million to bail out the Whyalla Steel Works in South Australia. On Wednesday, South Australia Prime Minister put Whyalla, one of the country's two steel plants, into administration for unpaid bills, and said he wants to help develop lower carbon steel production in the state. Australia is the world's largest producer of iron ore, which earned more than $100 billion in export income in 2023-2024. The wider iron and steel sector supports over 100,000 direct and indirect jobs. And the country will hold elections by May. A key policy for the Labour government under the Future Made in Australia banner is to harness the clean energy transition to drive manufacturing growth and add value to critical minerals. And then in Canada, the federal government has confirmed that small businesses will have to pay tax on their carbon rebates, and despite government's promises otherwise, because Parliament can't currently pass legislation to make the payment exempt from income taxes. But if legislation passes to do the government the government says that businesses can apply for rebates for the taxes paid on their rebate. And the president and CEO of Canadian Federation of Independent Business says that the situation is a mess. Smaller and medium-sized businesses without a large carbon footprint pay the carbon price on fuel input the same way an individual consumer does, including buying cars for fleet vehicles or heating and powering their offices. Initially, the government was going to set aside 7% of revenues collected from the consumer carbon levy to provide funding to smaller businesses to reduce their energy use. But those programs never worked, and by 2024, more than $2.5 billion in carbon price revenue was owed to those businesses from 5 years of paying levies. In the 2024 budget, then Finance Minister Chrystia Freeland said that the money would be paid to 600,000 small and medium businesses, and those payments were finally paid in December. Now, India and France have unveiled a collaborative roadmap to develop safe, secure, and reliable artificial intelligence as Indian Prime Minister Narendra Modi and French President Emmanuel Macron discussed strengthening cooperation in science and innovation within their bilateral strategic partnership. The two leaders expressed their support for including Indian startups at the French Startup Incubator Station. They also welcome the expanded opportunities to utilize India's real-time payment system, unified payment interface, and in France, as well as in France. On February 10 to 11, France and India co-chaired the Artificial Intelligence Action Summit, which gathered heads of states and government leaders of international organizations, small and large enterprises, representatives of academia, non-governmental organizations, artists, and members of the civil society. Now let's go to the UK and see what's happening there. We saw inflation numbers from that country higher than expected. We have Juliana, now our correspondent, joining us to tell us perhaps reactions and drivers on that. Hi, Juliana, good morning. So what do we know about those numbers that came out hotter than expected?
Hotter than expected is a good description, Annie. Yesterday, the Office for National Statistics released data showing that consumer price inflation, leapt from 2.5% to 3% at the beginning of the year. And I think the number that was priced in was probably about 2.8%. And I think this comes as a real surprise in January, because typically at this time of the year, you'd expect retailers to be cutting costs, but that wasn't the case, because one of the highest drivers did come from food. So meat and bread, lots of fruit were also a lot higher at the checkout. And something that's much more controversial in the airways in the UK at the moment is the hike on private school VAT. That increased by about 20% in Rachel Reeves's budget. And because it was implemented quite swiftly, we're seeing that private schools in the UK have charged exorbitant amounts to parents, and this has leapt up the CPI. So yes, really concerning, particularly because today, just earlier this morning, the British Retail Consortium released results of its monthly measure of household sentiment, and economists do look at that survey quite carefully, and it's showing that for a fifth consecutive month, there has been a decline to minus 37. So I think there are concerns now about how the Bank of England are going to weigh this data with cutting interest rates, which are still quite high at 4.5%, especially as we have more price rises coming by the way of higher energy bills, and also the employment tax, which is going to be £7 billion of additional costs to businesses in the UK. So there doesn't appear to be hope on the horizon.
Yeah, well, not so good there. But as you've mentioned, of course, the Bank of England, it will be the next stop now. But I hear that even the currency is reacting to these inflation numbers.
Yeah, well, I've just had a look at the British pound, which does appear to be doing a little bit well compared to the euro. I think it's up 0.16% against the euro at the moment. And that's because I think markets now are weighing the geopolitical risk of what's happening in terms of the rhetoric that we're getting out of the White House, Trump doubling down on those Zelensky dictator rumors, there are concerns about European security. So the pound is doing quite well against the euro, but also as well the FTSE still lower this morning. It's lower. It's down about 30 points. There's been a slew of results, including from Lloyd's. Lloyd's shares are down this morning, and that's dragged down the market.
And then it seems the conversation around the refugees and British citizenship is back in the news. Refugees who arrive on small boats, lorry, and those irregular means.
Yeah, this is a pretty serious topic, something that's difficult to try to condense. But the Labour government are really cracking down on immigration, which, as you know, is always a hot topic here in the United Kingdom, Innie. And there's been quite an alarming change in the rules about good character. Now, if you do come to the UK and you are successful in obtaining a visa, it does take you multiple years to be able to finally become naturalized and then apply for citizenship. Now, to successfully become naturalized, you have to make sure you adhere to certain rules of good character. And now the law has changed, deeming that if you entered the UK illegally before the 10th of February 2025, no matter how you got here, you can no longer be seen as being of good character. Therefore, you will not be able to apply for naturalization, which is, of course, very frightening, alarming for hundreds of thousands of people, not just those who have arrived on small lorries. Lots of people have come here before biometric with a plane. So yes, this is a concern. There has been one, the first lawsuit trying to overrule this by a young Afghan, a 21-year-old gentleman who arrived here 7 years ago. But, you know, we are living in frightening times, and the UK legal system does change every 6 months or so when it comes to immigration. So please just make sure that you are checked and not fear, but get the help you need if you are falling under this category.
Yeah, it does seem like migrants are not having it easy this time. President Trump is on it, and now we have the UK. I wonder what's going to happen in the future, Juliana, but thank you so much for giving us updates on that.
Thank you, Annie.
All right, Ladia, I hope you're not planning to be a migrant anytime soon, because President Trump is on you.
Right.
And now the UK legal system is changing, as Juliana
Even
said.
If I migrate, it will be legal.
Oh, okay.
Yes.
Oh, you're a big boy.
I'll be legal. You know. Hopefully. Well, you know, it's interesting what's playing out so far. 2023, 2024, the UK, US, we saw the inflation numbers were going down,
and
they were cutting rates. And, you know, fast forward to now, we're seeing Nigeria.
Yeah, because we saw US last week, and it also ticked up. And now we have UK,
the UK is
also up.
And after holding rates
and
in the
it's
US.
food, Laddie. I don't know if you listened to Juliana real well. She talked about the drivers mostly being food. If you remember the US too, it also has to do with food. Because egg was specifically mentioned.
Right.
So I wonder why back here in Nigeria, we are cutting the weight of food when it comes to measuring our inflation, seeing that food is a major contributor. Exactly. You know, I know we now have other factors, you know, contributing to our inflation and our spending.
Are they telling us Nigerians are spending more on maybe data and other stuff?
And bank, you know, I think there was the bank charges too. That was also, are we spending more there?
Maybe we're not spending that much on food anymore.
Really?
Maybe.
That is news to me.
We need data for that.
But anyways, I mean, at 1 p.m., we're going to see what's going to happen.
Right.
We saw Japan there holding rates for the 4th time, but I don't think we can say that we are at par with them. So we shouldn't compare the situation, because we do have our own specifics. But we see, I heard you talking to Dr. Okolo there about the Naira, TikTok, but she emphasized that it's temporal. So let's not get our hopes high.
Even though we've seen stability.
Domestic price is going down. Inflation has gone down more than 10%. So, Laddie, we're going to cut.
Good days.